Hi everyone and welcome back to today's report with me, Richard Perry, market analyst at Huntech Markets. For Friday the 27th of June, I'm going to look at dollar yen now. And the yen has significantly strengthened. That's come on the back of the jump in the core CPI for Japan to a 32-year high. And that's certainly helped to drag dollar yen lower. Three successive lower lows on dollar yen, and a nice break of that 101.57 key support, which was the June low. So a big move to the downside is what we've seen overnight, and this sort of now looks to be shifting the outlook towards the negative for dollar yen. These momentum indicators have dropped away, stochastics negative configuration, MACD lines having been neutral, dropping, and also RSI is dropping as well. So the outlook is testing to the downside. I've drawn in this key level at 101.30, which has been historically throughout this chart a very good level of support, and pretty much bang on hit early today. 101.29 was the low. So I think you just need to bear that one in mind, that on a historic basis, 101.30 does tend to act as a basis of support. You look at all these daily candles, none of which really close below that 101.30. You get these dips down, you get the tails back down. I mean, you had that one late May where we hit 100.80, but ultimately never closed below that. So it's only the tails, only the intraday moves that go below 101.30. So that will be an interesting development. If we get a close below 101.30, then maybe you can start to think that the outlook is certainly under significant pressure for the dollar on this one. So that is one to certainly watch out for on this chart. That is the hourly chart shown in more detail, although I will zoom in slightly now for the resistance levels. You've got 101.60, probably a fairly decent gauge of resistance. Now you'll see throughout the last few days you've got these periods where you get the dip and then the rally, and you've had the dip, and you've seen once again the RSI and the hourly chart go towards oversold. So you've yet to see that rally, and I think that rally that takes the the hourly RSI back towards that 50 mark. Currently 38, so it's still a room for this to unwind. So what you'd be probably looking at is 101.60 is a fairly decent resistance now on dollar yen. So I think that might be the sort of area that you could get a rally into before that falls over again and puts pressure on the downside once more. So maybe a little bit of strategy for you to look at there. I don't really see, in terms of upside, there's further resistance at around 101.80 that has been a good support and has now become resistance. So again, if you moved, so for example, got a fairly sizable rally, although we're not seeing one at the moment. If you did get a sizable rally that took above 101.80, then that would start to think that the bulls are fighting back, but you've still got this big downtrend resistance that comes in at 101.90. So there's a lot of overhead resistance in place that would hold back a recovery for dollar yen, and suggests that any rallies should be sold into. Anyway, I wish you good luck in your trading on dollar yen today. The Michigan sentiment indicator at 255 could have an impact on this chart, but other than that, I think we're still playing on this Japanese CPI data, and I think we're going to be under pressure for dollar yen throughout the day. Okay, I wish you good luck in your trading, and I'll speak to you later. Thank you.